All right, so we're gonna get started in tonight's session. So what we're gonna do tonight is we're just gonna review our trades, review what we did right, what we did wrong, what was the market sentiment, and also the catalyst on why the stock is going up or down. So the psychology behind the trade is very important. So we're just gonna go over real quick. Sorry, Logan, I was asking about how long you've been trading. So Logan here, everybody, just joined in. He's been actually practicing for what, a year, you said?
Yeah, right around there.
Okay, nice, man. So you've been consistent at it, it sounds like.
Yeah, I've been trying to. I was started off in school, university, and now I'm taking a break from that, so trying to get more into it.
Right on. So what got you into trading? Like why trading?
I originally started off with crypto, and so I was getting into Ethereum and like Bitcoin and stuff like that, and moved over to like NFTs, and then trading was kind of like, it kind of just fell into place and got interested in it and just kind of explored it,
Gotcha.
and yeah, just kind of fell into place from there.
Sweet. So you mainly got started in crypto. Now you wanna do more of the stocks and options or something, or?
Yeah, exactly.
Nice. Okay, okay. And you've been paper trading. How's that been going for you?
It's been slow. I haven't made any major gains. It's been mostly like um, just long-term investments for the most part. But I want to get into like the more day trading eventually once my TD Ameritrade account gets that 90 days open. I
Okay.
think I can do it then.
So did you get flagged or something?
Yeah, I did because
You
I
did
did
get
like
flagged.
5 investments in one day, and they're just like, "Oh, you can't do that."
Yeah.
So
So here's a trick. Call them up and
okay,
then let them know, hey, I want to trade my account as a cash account.
gotcha,
And
gotcha.
then you will not be restricted under the PDT rule. The downside of that is once you deploy all your capital, you have to wait the following day for it to clear up for you to trade again.
Okay,
So the
I'll make.
rule the rule I typically apply is if you have a cash account, so it just means you're not under margin, right?
Mhm.
That's the reason you're under PDT because the default account settings is under margin, which is allows you to borrow money from the brokerage. But if you're in cash account, then you're just only trading what your available capital that you have deposited. So the rule
Gotcha,
is
gotcha.
as long as you're in cash account, you can trade as many times as you want, as long as you have your balance um, haven't been deployed. So for example, if you have $1,000 in there and you're doing $10 trades, you can do 10 trades before you run out of that. 10 trades, $100 a trade, and then you run out of your $1,000, right? So you have to
Mhm.
wait till the following day till it clears up. So with that said, you did 10 trades, but you're not under PDT, so therefore, you're not gonna get flagged for the 90-day rule, whatever, and you can repeat it again the following day. Is that making sense?
Gotcha. Yeah, yeah, for sure. I'll definitely call them up tomorrow in the morning time then.
Yep. So you mainly trading. What kind of stocks are you trading?
I was getting into stuff like AMD, Netflix. There was like some oil companies I was getting into, Boeing most recently,
Okay.
and then Google as well. And then I was doing Nikola a while ago when that was booming.
Nice, nice. So you're mainly buying like a couple shares and whatnot.
Yeah,
Okay.
exactly.
That's good, man. That's good. So there's many different strategies that I apply, especially with scalping stocks, right? So my
Hmm.
trading style is an intraday trading. So I play into like momentum and also I buy the dips or directional trades, and it's just scalping. Like I'm in and out of trades pretty quickly.
Hmm.
Just recently, I've been messing with the whole option side and try to apply the same strategy. We're still fine tuning that strategy right now, and a lot of the members here are starting to really pick up on it, and that's just something that you can add on to your skills, right? To your different strategy.
Absolutely.
So that's good. All right. So today, um, can anybody tell me what was the market sentiment before the market opened? What was the main catalyst that gave us like a hint? What could the market do? Can anybody tell me on that?
The
Anybody?
war with Ukraine, Russia and Ukraine.
There you go. So when I woke up at like 5 in the morning, first thing I did was like look at all the news on the, Twitter, YouTube, and any other social media that I follow in regards to like stock market or just news in general. And first thing was like, oh, Russia invaded Ukraine. I was just like, holy damn. And look at the market this morning. It just freaking gapped down, right? Like, let's see, it closed from yesterday. So I'm in the hourly right now. So from yesterday, as you can see, we can look at this, how far it pulled down on the SPY. So it moved, what is that? 22, almost 23 points. And that's huge for SPY. SPY only, the range for SPY is typically like, 6 maybe, but to move 23 points, that's insane. Just because of the market catalyst. Um, One thing that I did made a mistake on is I put too much weight on the market catalyst, which is the news, and completely ignored the fundamental of buying the dips and the indicators that we use, which is the 10 and 20 simple moving average. As you can see on the screen, right? You guys can see my screen.
Yeah.
Confirm that. Okay. So as you can see in my screen, the yellow is my 10 simple moving average SMA, and then the blue is the 20. I rely on these two indicators as my momentum direction, right? So wherever it's pointing, that's the momentum. Okay. Um, so another thing also is looking at the lows, right? So going down to the bigger time frame, like that 4 hours. So if we were to draw a line and to kind of give you a back end scenario is um, I go into the bigger time frame, like the 4 hours or the daily, to find support and resistance. Okay, and completely ignoring the fundamentals of support and resistance because I was too biased on the news, and that's mistake number one. And the reason I say it was a mistake because I did not capitalize on the upside bounce today and basic scalping fundamentals. That was a perfect setup for a bounce, right? If I would have just respected the indicators as well. Instead, I fought the trend and that didn't turn out so well. So as you can see right here, we know the bottom of these moves are past behaviors. We know that when it got to these levels right here, right, what happened there when the price action came down to that level, it got bought up and shot up pretty high. Same thing what happened. Here, I'm gonna zoom in here. Same thing what happened right around here, right in this level. Okay, so we can make that a clean argument that hey, when it was at this level, it shot up. When it came down again, it tested that level, it shot up, right? So as a day trader, okay, we have to respect these levels, no matter what the catalyst is. And another thing that I ignored is the move was the news was already priced in, right? If we zoomed in, the news was already priced in from the sell-off. Priced in means it's already extended, it's already oversold, right? We know that, you know, buy low, sell high, or sell high, buy low if you're shorting. So that's the basic fundamental, and I completely ignored that today because I was too busy thinking about the war. That it should keep coming down. It should keep coming down. It's gonna come down. There's bad news. There's war. Russia's taking over Ukraine. Like all that stuff is playing in my head and completely forgetting about fundamentals of buying the dips and respecting your 10 and 20 indicators, which is right here. Logan, just to kind of give you a background, um, whenever the price candle is above our 10 and 20 simple moving average, it typically continues in that direction until it breaks to the downside, which is like right here. This could have been an entry for a short, but this whole time there was no entry in here for a short. As long as you stay above, the price candle stays above the 10 and 20,
Hmm.
and the 10 is leading the way, whether it be upside or downside, then that's a strong momentum to in that direction. And as you can see right here, this level here could have been an ideal short entry, and you're familiar with shorting, right?
Correct.
Okay. So that's an ideal short entry because we fell below the 10 and 20 simple moving average, which is your momentum indicator that the momentum has shifted to the downside. And then when it broke again to the upside, that's your indication, hey, the momentum is shifting again to the upside, and then just switch bias. And the challenge with us as traders is our emotion that we tend to want to be right. Because if we enter short here and the the chart is clearly telling us, hey, it's breaking to the upside again. Momentum is shifting to the upside. We tend to get emotionally wanting to be right and say, no, it's gonna fall, it's gonna fall. And then this scenario right here is another emotional trigger that goes, oh, see, I was right. I was right. I'm just gonna hold. Well, it told you again, hey, momentum, especially this big green candle right here. The candle told you again, there's still buyers at this level. They want to buy this thing up. Okay. And then if you didn't get out then, this should have been a clean signal to say, hey, I'm just going to cut my losses, either set aside, sit in the sideline, and then wait for it to break again to the downside. But can somebody tell me what do you see in this level right here that tells you there is no short entry? Can somebody tell me this in this level right here?
Does not break the 5 or the 20 SMA.
Yep,
Yep.
there is no break to the 10 to the 20 SMA. Okay. And on top of that, now they're pointing up. Now they have a momentum upwards. That's literally as simple as you can make it. Whenever your 10 and 20 simple moving average, whichever direction they're pointing, that is the momentum. So right here it tells you even with this this is two red and one little green and then another red candles on the downside, your momentum indication it still tells you that hey, this is gonna bounce because you still have momentum pointing up. The stock, if the stock was to keep dropping down, your 10 and 20 SMAs is going to start curling downwards, right? Which is what you see right here. Okay. And that's when the ideal entry to go short. So therefore, this whole time right here, this zone right here, ideally in a perfect world with no emotion involved, this is a clean read, right? This is a clean read. Anybody that understands what I'm explaining here should be able to go, hey, this is a long setup. But the challenge is our emotional gets in the way, and wanting to be right and our ego to be right gets in the way, and we tell ourselves it's gonna keep going, it's gonna come down, it's gonna come down, it's gonna come down, and then you get blinded that the chart itself is telling you, no, I want to go up, right? We want to be right because we already have a short bias because the news, right? Russia, war, it's gonna come down. Who's buying all these stocks? We're going to war. But the fundamental is the chart fundamental is saying, hey, let's go long. So that was my mistake today, and I want you guys to learn from it because I preach this. If you watch all of the training videos in the past, um, I preach this, right? Whenever it's pointing up, the price candle is above it, we're going in that direction until it proves itself otherwise when it breaks down to this kind of setup right here, and then that's a short setup. Okay. There's nothing wrong with getting stopping out. It's a great practice to just let the trade go and flip. But our battle, being a trader, 90% of your battle is your emotion, and the 10% is understanding the chart. Okay, so that was one of my mistakes. Who made money on this on today's market? Because I was red today. Who was green? Let me see the P&L. So
Got tore up today.
you got tore up today. Do you
Yeah.
feel like it was the same scenario, like how I just
Yeah.
described why I was I was red. I fought the
Yeah,
market.
yeah, exactly. Ex- Exactly. I was short biased the whole time for exactly what you said, and I just kind of kept on, holding, and I'm like, oh, it's gonna flip, it's gonna go down, and yeah, it tore me up.
Tore you up. But we know from all of our studies, from all of our coaching, that
Yeah.
this indicators, that's the reason we put so much weight and trust into the 10 and 20 SMAs. It's been proven and proven. We have an 80% track record that anytime you look back through all the charts, just you don't even have to wait for a market open. Just look left, right? You look left like this. Okay, boom, below the 10 and 20, downside. Gets above, possibility, you have a quick little move, it breaks the downside. If you're still long, you didn't cash out right here, then you get out right here. Boom, more downside until it switches again, and then you get stopped out. But that's the thing, this stopping out, the accepting that, oh, I was wrong. But guess what? Look how small, right? Look how small when you're wrong, right? And look how big when you're right, when you respect it. Look how big that is. Okay? Is that starting to make sense? Look how big these wins and look how small these losses. And the idea as a trader is you want to minimize your losses as small as they can and then maximize your wins. And this is literally as simple as you can get. Class over, go study this, go print it and put it in front of your screen and just remember it. And just repeat that whole practice. You look left again. What happened the previous day? Same scenario. Okay. I can repeat this. You go long. If you didn't sell, you get stopped out right here, and then you went short. Boom. You stopped out right here. You went long. If you didn't cash out, you got stopped out right here. Look at these losses, right? Just about the same level, just about the same level, but look at your wins. Look how massive that is. Look how massive that wins. Okay? Is this starting to make sense to you guys? This is literally our battle every single day is accepting these little losses right here and let these winners run until it breaks to the other side. We should not be doing anything, right? We should be riding that wave. Okay? But during this choppy session, because we're kind of impatient and we want instant results, and what if like, oh, I was profitable. Let's say you get in right here, you get in right in this trade, and then it goes down, you're short here, comes down, and it bounces up. And you're like, oh, dang it, I should have taken profit. But then the candle is not over. It hasn't crossed over yet. You need a closed candle, especially on a 5 minute, especially on a choppy market, right? Especially in a choppy market like what happened today, because we traded SPY. Let's go to the beginning. Right here in this session right here, in a 1 minute, that is really choppy. So let me show you here. So right here, you just chop. Like look how many crossovers that did. Look how many crossovers that did in the 10 and 20. That's what's called choppy. So when it gets choppy like this, I just switch to the 5 minute, and then I use the 5 minute as a clean confirmation. So that means you get chopped up less times. You get one, two. You only got chopped up twice, maybe three times right here, and then you get such a big move when it doesn't cross over, right? Look at these wins, right? Look at these wins. They're huge. They're huge. Look at these little tiny losses. Okay. And that's what I really want to emphasize today because my goodness, I fell victim to being confirmation bias. And that's what it is you get fixated on what the news said, what it needs to happen, what it needs to happen. The market doesn't give a damn about what you think, right? We all learn that. The market doesn't give, oh yeah, the news, yeah, it's coming down, that's fine. Yeah, that's the bad news. Ooh, yeah, we should crash. But guess what? Some somebody else had a different plan, okay? And we just have to trade based on the direction of our indicators and let it get chopped up. I'm fine. I'm okay to get chopped up small. But when we learn to hold these trend, we're gonna win massively. Okay. All right. So with that said, any questions? Is that making sense?
So like the same, like we're talking about shorting here for the most part, but the same rules kind of apply for when you're going long as well, correct?
Correct. The
Okay.
same rule. So Logan, just to kind of catch you up, here is our patterns. So we're using the 10 and 20 SMAs. So
Mm-hmm.
this pattern right here is what we call the basket, right? Or you can call it a cup. So whenever the price candles chops up like this, so you got one, two, right? Oh, that's not how it looks like. Hang on. So typically it'll look like this, right? It'll starts to cross over, and then once you can see the trend is starting to get lower and lower, right?
Mm-hmm.
So when you have the 10 and 20 starts to basket like this is likely a short setup. Majority of the time, this is a high probability short setup. You can start to see it right here, right? You see how
Mm-hmm.
the 10 and 20 starting to curl, okay?
Right,
And that
right.
happens the same thing on the upside. That's a good example right here. You see that? So
Okay.
ideally, the perfect setup right here for the long side, okay? So right here, it came down, nothing closed, and even this candle closed. Actually, that's not even a close because the red candle's close below and the green candle's close above, right? The ideal entry for a long was this guy right here. That is the cleanest entry you can have. Or you can wait for a pullback because there's always a pullback, or not 100% of the time, but most of the time there's a pullback and you enter right here. Now you're using this 10 and 20 as your support. So basically your stop out, if this candle flushes back down below this green candle right here, is your stop out. That's your stop,
Gotcha.
right? Because if if this candle flushes right here, if this candle right here flushes down, your 10 and 20 hasn't even curled down yet. It's still in the same direction. But you have to still pick a level. You still have to pick a level that, hey, if I'm taking this trade right here and this thing breaks, you minimize your losses by by that spread. Look how small that spread is, right? And then when you're in that same trade, nothing breaks to the downside, so therefore you took that trade and you're riding it all the way to potentially right here, right? That's still pretty good. You see?
Right,
That's
right.
still pretty good. So going back to, let's say it jumped up, and you still didn't sell, but look at right here now, right? It sold, patiently, boom, it cracks. Candle closes below, and your 10 and 20 is curling down. You get out right here. Now you can see your profit spread. Your profit spread is this much, okay?
Right.
Versus your losses over here, if you got chopped out, right? Your losses are very tiny, okay? And you can literally repeat this over and over and over again. So if you took a short right there, you flip, you could have scalped it to like down here if you wanted to use a support level. But that perfect trading scenario is you don't get out until it breaks to the other side. Okay, if you're short bias, enter below the 10 and 20. Okay, and the perfect setup too is when the 10 and 20 like this. Let me see, right here. The crossover is the best short entry, right? You see the 10 is
Mm-hmm.
now leading the downside. So your perfect entry is right here on this guy, the top of that
Gotcha.
candle, because you're using the 10 and 20 as your resistance zone. The more you layer your resistance, the better and stronger it is. They get even stronger the bigger the time frame. So this is on the 5 minute. If this same setup happens on the hourly, I'm gonna show you. Happens on the hourly. Let's just look left. Right here. You see that crossover right here?
Mm-hmm.
So there's a crossover. Boom. You're using this 10 and 20 as your resistance zone to short into. So now you rode that downside all the way down until it crosses over here in the morning. I mean, the morning didn't even right here. So your exit was right here. So you had all this gap from short here all the way to over here. Look at that gap. You see what I'm saying? So if you can focus on patience and really respecting these um, patterns I'm sharing with you, you can catch and ride these waves.
Right. So like the SMAs, when they cross over, it can be an indicator of like momentum changing either to the upside or the downside. And then once we have a candle that breaks over it, that's like an indicator for when to come out or to get in for a short.
Correct. And keep in mind the 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 uh, the the trend, which is the trend of the 10 and 20 itself, is your
Mhm.
momentum, right? So if the momentum shifts, like, so as this is clean, right? You can tell this is downside momentum, right?
Right.
If you wanted to switch to the long side, you want to see the trend start to flatten out like this because it's losing its momentum. That making sense right here?
Yeah.
So right here, it's even okay because this is more like a fake out right here. But again, even if you got faked out right in this level, you went long, right? Because you're using the crossover, which is what's what we practice. But then when it crosses to the other side, but look how tiny your loss is. And then you're like, oh heck no, it flipped over to the other side. I'm just gonna go short now. And then you went short, and then you rolled this big box right here.
Right. Right.
Okay, so that's the perfect scenario. But the thing that's really gonna hold you from following that is your emotion. That's it. Literally, like you can trade anything, crypto, stocks, options. If you follow this, you should be you should be profitable because you can literally like this is what I want you guys to do. Make sure you have your 10 and 20 SMA, okay? And then just map out any stocks. Okay, any stocks. It doesn't matter what stocks it is. Let's pick AMC. AMC. Okay. Oh, what the heck did I move? Okay. So tell me if you got in short right here and you rode that thing down until it flattened out, your exit's probably right over here. This guy or this guy? This guy probably would have gotten you out. But look at this box. Look how big that range is. Okay? Look how big that range. And then another thing I want to share with you guys too is boxing. You guys familiar with boxing, right? Who's familiar here when I talk about boxing? Boxing your highs and lows or the range box. Gertie,
Yes, sir.
you know what I'm
I know.
talking about, right?
Yep.
Okay. So right here, right, we can see a high right about here, and then we can see a low of right here. So once you start using this boxing method, you can call it consolidation, but when you put this box right here, okay, that makes it so much easier because now we know that it's like consolidation. This thing is loaded up in any direction it wants to go. If if AMC was to pop over this, we know we're above the 10 and 20 SMA. If AMC candles fall below, we know we're going to be below the 10 and 20. It's just a tighter range. It's a much better trade, but you wait for the break on either direction and you ride it. And you can rinse and repeat that process. Right here, we can do the same thing. Like you wanna draw your most touch level, right? So right about here, and you come down. So you drag that across. Okay, that is the level. Like I didn't pick here because that level is not it's not enough range or a consolidation. Here was a tight range. You want to pick the tightest range. As you can see, you could have gotten faked out right here, right? You could have gotten faked out because that candle closed above. You would have been thinking, oh, that's long, but then you would have cut it short right here, and then flip to short, right? And if you were to put your box from where you entered and where possibly you could have exited, maybe, let's see this guy right here. Okay, look how much bigger that is. And that trade would have been, let's see, 1, 2. So that's 2-to-1 ratio. And sometimes when you catch a really good trend, you'll catch like 3-to-1 or 5-to-1 risk reward ratio. It means you're risking $1 to make $3 or to make $5. And if we practice this over and over, your account's going to naturally grow. Okay. Any questions? Let's go. Who else? Who was green today? Was anybody green today? Or did we all get stuck in a news bias?
Definitely got stuck in the news bias.
Yep, yep. Okay. Gian, how'd you do, man?
Yeah, I was sorry for my voice. I'm sick.
Oh, sorry, bro.
Yeah, so everybody on the channel was short biased. So I I couldn't I was looking at the charts and I'm like, man, it's going up, it's going up. So I got stuck on puts.
Mm-hmm.
But the last minute I got some of my money back on that power hour when
Oh.
it hit 22 and then it went all the way to 28.
Mm-hmm.
But I only put $100 shares because I already lost a lot of money,
Mm-hmm.
and $100 I made at least 210. I doubled it.
Nice. Yeah, because the acceleration on
Yeah,
this option is it just
yeah,
multiplies. Yeah, that's crazy.
yeah. Yup. But for some reason too, I called in sick for the whole week,
Mm-hmm.
and this whole week I've been losing. I guess it's better for me to go to work, and I was actually profitable because I had my mind somewhere else and I wasn't just focusing on just trying to make money.
Yeah, that's good. So like
Yeah,
that's another thing too is, not thinking about the money side and think more of the setup
yeah,
perspective. Overall,
exactly.
we're gonna be profitable overall, right? Because trading is not 100%. There's gonna be losses. That's part of the game, and
Yeah,
we just gotta work on overcoming that, and we should, from there become a better trader. You know, and what they say, you want to
yeah.
trade like a robot. Yeah, look at this.
Well, when I was at work, um, I was able to go in and out of my trades quick because I
Hmm.
didn't want to get stuck. Because if I get busy, then I didn't have, I'll lose all my money. But when I was at home sick, um, I keep on thinking that, oh, it's gonna go down, oh, it's gonna go up, and I wasn't really focusing on my charts, you know.
Hmm.
So yeah,
Yep. So, all right, I'm gonna give you this good example here as our boxing. Okay. The little box, the little box is our loss because we entered short and then got stopped out. This is the ideal picture. You entered short here, you got stopped out here. So you entered short right here, or any one of these levels, any of these candles, and you got stopped out. So the little box range is how much loss you took. Like in the perfect world, you're like, oh dang it, it closed above the 10 and 20. You got stopped out. Or even if you let it run a little bit, you still got stopped out, right? But once you switch bias, once you switch bias, look at that ride. It didn't get stopped out until after hour. You see what I'm saying? So we entered right about here. That's when it crossed over the 10 and 20, right? We're above, and then you would have been stopped out right here in this candle, right there, because we broke below. If you didn't stop out there, this candle right here should have stopped you out, which is about the same level, right? You guys starting to see what I'm seeing here? Logan, does that
Makes
make sense?
sense.
Yeah, it does. Definitely.
Cool.
Yeah, that's really clear. Looks good.
It's very clear, man. Again, the only thing is stopping us from really catching these moves and profiting like massively
The
is our
emotions.
freaking emotions. Emotions, bro. Emotions. Okay? Now, who wants to make a promise they're not going to let their emotions win and we're going to let the patterns present itself and trade the patterns?
That's a tough fucking promise, bro.
I'll take that.
Do it.
All right. So, if this is why I want you guys to be like vocal while we're trading. If you guys are trading, call it out. All right? Because we're gonna help each other. If we, even for me, if I'm trading and I'm like, hey, I'm short and it breaks to the upside and I'm like, I'm still short. Somebody could just say, TJ, we talked about that. Like, it's on the other side of the 10 and 20, bro. We're long. I'll be like, shit, you're right. Or I can call you out too. And we should be okay with that because at the end of the day, it is literally proven right here. We can you can test this for yourself just to make sure TJ's not talking BS here. Just look left randomly. Pick a random spot. Okay? Pick a random spot. It doesn't even matter. It doesn't matter what stock it is. Okay, let's go. What's your other favorite stock? Apple? Apple. Okay? Bro, it doesn't matter. Like literally right here. Okay? You shorted right here. Okay? And you wrote all this down and you got out right here. And you shorted right here. Boom. And you probably got out right here. Now, if we put that in the box perspective, here's your loss. Here's your win. Okay? Here's your win. Come on, guys. Come on. Somebody prove me wrong. Okay? Your wins are massive. Your losses are tiny. If we can just overcome this whole emotional trading. Okay? You went long. You got stopped out. You carried short the whole time. And then you exited right here in this candle. Okay? Now let's box it out. You got in. Here's your loss. And here's your win. Somebody go test this out. Hopefully you guys can't sleep after this. Okay, I'll do this over and over again. Here's your long. You got stopped out. You went short, and then there was no profit taking. There was nothing told you to take profits, and this is in a 5 minute time frame. Okay, nothing told you to take profits until the next day, right here. So in that case, let me see. Which typically you don't want to hold overnight, right? So ideally you should have closed this out already, because we can't control what happens overnight, right? We know that. So here's your stop out. That's your loss. And ideally, this is your win. Look how massive that is, right? Trading is easy, but emotion control is so hard. So hard. Repeat, rinse and repeat. Are you guys really seeing this, or am I sound like a broken record right now?
Oh no,
I
I'm
think
seeing it. I'm excited.
It's clear.
drill it into our head so we can make sense of all this.
This is it. Like, I don't care how many times you're getting stopped out right here. You got stopped out right here. You got stopped out here. You got stopped out right here. You got stopped out right here. And then finally you're like, it's still long, I'm not giving up. And look at your losses. Your losses, let's just say let's count it. Let's go. That's one stop out, and that's two stop out, and then that's three stop out. And then you go bam right here, because this is where you would get close sell because it broke, right? Right here. So now let's stack them up. Okay. This is one loss. There's two loss, and here's three loss. Did we just make up the fucking losses?
Absolutely.
Sure
Dude,
did.
even if that move wasn't as big as it presented itself, that that overall you're gonna get all your money back. Okay? Overall you're gonna get all your money back. And then here's the caveat to this. Um, if you do your position sizing properly, so if you did one trade, let's just say $100. Second trade, you did another $100. So you lost 200. And then the third trade, you did another $100. So you're down 300, right? But you won however many boxes this is. So let's just say one, two, three, four, five, six. So you went $600 and you lost 300. So you technically up $300 for the day. And another skill that this is for the advanced trader. Okay. Trade number one, you did 100 and you lost. Trade number two, you did 200 and you lost. Trade number three, you went 400 and you lost. Okay, because this is the double up strategy. And Logan, don't try this yet until you're familiar with the or practice or really follow your rules to stop it out, because this could lead you to a bigger loss if you haven't perfected the emotional control to be able to get in and out.
Yeah, I'll definitely
So
practice it on my mock accounts.
there you go. So 100, you lost. 200, you lost. So that's 300 together. And then you went from 200 to 400, you lost. So that's $700 to get total, right? $700 total. And then the next trade, okay, this is the next trade. This guy right here, this big box, is gonna be from 1, 2, 4, and then 8. Is $800 trade, and you went 6x the size. So you go 800 times 6. Can somebody do that math?
2,400.
Okay, times
Wait,
6.
is it?
So 4,800 bucks. So you lost 700, you gained 4,800. Okay, that's of course, you have to factor in the actual, numbers, like how many dollars it moved here, how many dollars it moved here. But the dollar movement itself here will tell you, like, you've multiplied your wins greater than your loss. But if you stick with the same size, 100, 100, 100, you still come out green overall. But that's two different strategies. The advanced one is doubling your positions, which is ideally when you have a cushion, you've built your profit, right? So you've been consistent for the last month or two, and now you have a profit cushion. Now you can start exploring into the double up strategy, because you can afford to, you know, sustain those losses. All
What's
right.
cool about this too is like if you combine that with the boxing you're talking about, maybe if you look left, that 171 to 170 range is a box, and you would have waited, until it broke out on the top, and you might not even taken those first three trades.
Mm-hmm. Yeah. Yeah, definitely. Let's see. We can look left. But yeah, starting to make sense. You can apply this strategy to any stocks. You can apply it to crypto, whatever. But the hard part is this boxing. What I'm learning is it doesn't quite work as well in the option trading, because there's so many variables in option. You have the time decay, theta, how long is your contract, how far out of the money did you buy, right? And what is the implied volatility, which is it's there's just so many factors that you have to get it right. And if you don't get it right, it doesn't matter if the stock goes your way like this, you could still be down because of the theta and time decay and all that stuff. There's so many different variables in options, and that's what I'm learning, because I can do this in my sleep when it comes to scalping stocks. But an option is just so different. There's just so many variables, and I feel like, I'm not quite getting it right now. But with that said, I'm gonna I'm gonna put option trading aside, and I'm just gonna show you guys how I kill it in scalping. For those of you that haven't seen me in scalping action, and how many of you watch my videos, my live trading videos scalping? If you haven't, you can go under the educational resources and then go under live trading videos. Cool.
Can you repeat that one time?
Under trade educational resources, which is one
Okay.
of the tabs. You're familiar with Discord, right?
Yeah, yeah.
Yeah, so one of the tab up above from where we're at right now, educational resources. You click that to do a drop down menu and watch like any of these videos, watch it, but the main thing is watch our coaching sessions.
Okay.
Those are all from the past. They're long, they're about an hour long, but there's so much like content in there. The questions that the group members ask is just you'll learn a lot. And then the live trading videos is me live trading. You can see my P&L fluctuates, my actual call outs. I think some of the videos here I screwed up because my screen share was actually showing something else besides from what I'm actually trading. And I've realized that when I was watching, it's like, why is that showing like completely different stocks? But my P&L is like, fluctuating with a different stock ticker symbol.
Happens to the best of us.
Yeah, trust me, I'm not like you think I'm techie, I'm not. I'm just like figuring this shit out and just YouTubing what I need to put together. But anyway, guys, that's that. And if you find a lot of value in what I just went over, this video is also recorded. Go watch it over and over and over again, and then go go try test it out yourself, and just go punch it in your chart, whatever stock symbol that you like to trade, and just look left and start doing that boxing method and finding out your support and resistance, right? And then using the 10 and 20 simple moving average as your guide. That's it. You literally master that, you can be a profitable trader. Cool.
And real quick, what time frame do you like to do the boxing on when you're looking left?
5 minutes. Oh,
5 minutes?
yeah, 5 minutes. Like let's just say I'm looking at today, and here's another thing that makes it difficult, right? Our confirmation bias, which is exactly what happened today. We were so short biased because of the news, and
Right.
that's gonna affect us if we let that win over what the chart is actually telling us. The chart will tell you the 10 and 20 SMAs will tell you where the momentum is going. Like there, there there's no need news for that. You don't need any news,
Sure.
right?
Yep.
But if we get stuck in a confirmation bias and we ignore this, which is what we did today, and we pay for it. We pay for it.
And I guess I was talking about like if you're boxing to look for like a level,
Hmm.
like when you're looking left, do you do that on 5 minute as well?
Yep, on a 5 minute, correct.
Okay.
On a five
All
minute.
right.
I like
What do
to
you
I
what do
like
you
to
like
look
the
at
hourly for?
the hourly. I like to look at the overall trend. So the hourly
Okay.
right here. So I switched it to hourly. Now I have
Yep.
I have a more of like I guess um an idea. I don't wanna
Sure.
call it a bias anymore. An
Yeah.
idea that hey, this could continue to go down, but I am open to whatever the chart present that day. And
Got it.
then also another thing I wanna emphasize too, like the gap fill method is like 80+% that it will gap fill that day or the following day,
Got it.
right?
Okay.
You guys heard me talk about gap fill,
Yep.
right? Whenever the stock gaps up or down. So Logan, you familiar with gap up or gap down?
Uh, a little bit.
Okay. So like the stock on Apple, right? It closed yesterday or just yeah, the other or was this what's today? Yeah, yesterday. It closed yesterday this low, right? And then it opened at this level, but we know that it came all the way down here. So this is what you call a gap down. And similar, if it went up, is a gap up. What the stock typically do, it will gap fill back to where the level was,
Gotcha.
right? That's the typical behavior, and it happens more often than not, either the same day or the following day. But just know it will do that, you know, in some time in the future. It will gap fill this area. That's just the natural balance of the stock. Whenever things are oversold, it will try to find its equilibrium. When everything is overbought, which is overpriced, it will come down to equal, fair price value. And that's just the psychology, and that's driven by emotion. So we capitalize on that. All right. Well, cool, guys. That's all I got for today. Any last questions before we log off and go study up some more and get ready for tomorrow?
Just a question about the program that you're using. What do you use to kind of track the stocks in the SMA 10, SMA, and 20?
So this platform that we have here, this is the Thinkorswim, which is TD Ameritrade. So you,
Okay.
yeah, you open an account with TD Ameritrade, download the Thinkorswim trading platform. Make sure you have the app and as well as the desktop version,
Gotcha.
and then you're set. And then as far as like getting your chart set up, I'll help you set those up. And there's also instructions on the um, under the what was it? Educational resources, and then scroll down to TOS codes or Thinkorswim.
Okay.
And then
Gotcha.
there's some contents in there, how to set it up and training videos and all that good stuff.
Awesome. Thank you.
All right. Well, cool, everybody. That's all for now, and let's get ready for tomorrow.
Thanks,
Cool.
TJ.
All right.
Thank you.
Thanks, guys. Have a good night. We'll see you tomorrow.
Have a good one.
See ya.